stuff. So with that, we do have some amazing guest speakers with us today. We have Josh Williams, who is well known within Aon and has contributed so much to the organization. It's truly impressive. He's only been with the company for 4 years and he's already reached director level. So super duper thrilled to have him here with us today. And we also have Emily Jung, who is a Spencer Scholar and has worked as an account service intern within the energy department at Aon in Canada. So with that, Josh, I will turn it over to you to share your screen and take it away.
Thanks, Dandeka. Couple asks of you as well. Please keep me honest on time. You know I am not shy and I like to talk. So
will do.
Let me just get the slideshow going. Awesome. So as Dandeka mentioned, Josh Williams, I've been with Aon for 4 years. I'm a director with our reinsurance team, focusing on property from an individual risk perspective. I also co-chair our Black Professional Network, and that's one of my passion projects in the New York area, as well as sitting on our National Black Professional Network Committee. I've had the privilege of holding a few different positions here at Aon. Really am grateful to be with you all here to talk about that. I started out in commercial property broking, then spent a year managing our diverse recruiting pipelines. And I moved back into our business, and I realized that might not mean much to everybody on the call, but that's not typical of your Fortune 500 companies to have 3 different positions in 4 years. I was only able to do that because of the sheer size of Aon and its commitment to cultivating and learning across all of our spaces. So most of what you'll hear today is going to be from a property perspective because that is my background. If I don't know something, I will absolutely tell you that. So forgive me if I give you an answer or I answer your question and it may be a bit vague. We can dive deeper into that offline. That's enough about me. I want to double click on some of the house rules. I think it's going to be really important that the session is interactive. What you get out of today's session is going to depend on what you put into it. So there's times I'm going to be giving you prompts and you have to answer a question. I'll give you a minute to think about it, but then I would really appreciate it if we all could share or a few of us could share. I promise it won't be scary. This is a safe space and a space to learn. So I'll just go into the agenda and cover briefly what we're going to be diving into today. I'll give you an overview of Aon, tell you a little bit about who we are, what we do, an introduction to risk. Then we're going to dive into what risk transfer is. We'll then to explore risk analysis, insurance contracts, and then I'll open it up to questions and a Q&A session. If we don't get through the session, I'll absolutely open us up to Q&A early. I want to make sure you all have time to ask your questions. So, Aon, who we are. We are a global professional services firm. We operate in 120 companies and have over 50,000 people across the globe. In 2022, we grossed over $12 billion in revenue. What we do, we are a professional services firm. Our CEO likes to summarize our delivery model as we are in the business of helping companies make better business decisions. What does that mean though, right? How do we do that? Instead of just telling you, I'm going to use this as a great opportunity for our first question. I need a volunteer to tell me what they think that means. Come off mute, raise your hand.
Nope, no one yet. Maybe repeat the question for them.
So our CEO likes to say that we're in the business of helping our clients make better business decisions, right? And that's kind of vague. I want to hear your interpretation of what that means. Then I'm going to dive into what exactly, how we see it and how our clients see it.
Go for it, Amanda. She's got her hand up. Go for it.
What I would take that to mean is like you help companies avoid making bad decisions. Like when there's something that comes up, giving them advice. And since you guys, I know it's insurance, like helping them recover when they do make a bad decision, like protecting them and keeping them from messing up because of anything outside of external factors. That's what I would take it to.
It's an awesome answer. So at our core, we're traditional property and casualty brokerage, but we've been doing that so well for so many years that we've been able to expand our operations into legitimate professional services firms. And really what that is high-level consulting. So let's take a step back and talk about professional services. Professional services firms don't often offer tangible product in most cases. Much like the name suggests, we help organizations enhance their business operations through detailed consulting and a tailored delivery model where we are able to bring subject matter experts to their business. So when you think about consulting, you probably think about the big four accounting firms or management consulting firms, but Aon is actually one of the largest consultants in the world, and we have expertise across many different disciplines, and we like to say that we help our clients make better and more efficient decisions. So again, I'm going to dive a little bit deeper into that because it does seem like an abstract concept, and I didn't know what it meant when I first heard it. So I think it'll be a good thing to just talk about a little bit about our solution lines. So we have 4 different solution lines: wealth, health, commercial risk, and reinsurance. Supporting those 4 solution lines, we also have a huge global data and analytics team. But let's just talk about each one of those solution lines. So the commercial risk includes the property and casualty consulting arms that I mentioned earlier, and encompasses experts in emerging risks such as cybersecurity and supply chain risks, amongst others. So that is our front client-facing arm. Health solutions help companies conceptualize their workforce's need for health and benefits, and that happens in a number of different ways across the ecosystem. Reinsurance helps stabilize our trading partners and our clients' risk retentions while creating more risk transfer options for them in the process. And wealth helps companies navigate the complex environment that is retirement and investment tools. Stop there. Any questions about Aon and what we just went through with the 4 solution lines? No? Awesome. Now for the fun stuff. I'm going to give everyone a minute to think about it, and then I need 3 answers before we move on. What does risk mean to you? And I'll give you a minute. 10 seconds, you can time me. And then I hope to see 3 hands raised. If not, I'm not afraid to call on people.
Yes, I like it. And I do know some of the students we have in the audience today are doing risk management internships. So hopefully you guys have some good ideas on what risk management is.
Hi,
Okay.
I don't know how to raise my hand, but my name's Rebecca Darden. I'm with MTSU in Middle Tennessee. And to me, risk management is just assessing the probability that something bad is going to happen. That's the first thing that comes to my mind.
Awesome, awesome. And I see Riley also has her hand up.
Kind of building off of what Rebecca said, I think it's kind of looking at a situation or even just a contract and saying, oh, well, like in this situation, what could go wrong? And then ensuring that you have the proper, like either insurance that if it does go wrong, you'll be covered, or just the right protocols in place. And that can include things like environmental or employees or pretty much anything that goes on within the business.
Fantastic answer. Jasmine?
Oh, we can't hear you, Jasmine. Maybe double check your audio. No, we still can't hear you. Let's go to Van Dang and then we'll circle back to Jasmine.
Hi, so for me, I think risk management is coming up with a plan to mitigate potential threats to your clients.
Great job.
Fantastic.
Jasmine, if we don't have audio, I'll just move on. We can talk after during the Q&A period about what risk means to you. So Webster defines risk as someone or something that creates or suggests a hazard. I think the really interesting thing about risk is that it's something that might be a risk to me, might not be a risk to you, and it's not something that's situationally agnostic. For example, a risk for me would be losing the trust of one of my clients. If you're still studying in school or early in your career, you likely don't have that exposure. So risk is not always viewed the same way. And that's why our clients rely on large firms like us to help them navigate their specific risks and what is going to make their business more efficient. So our clients and our insurers view risk a bit differently. So when you talk about risk management options, you have avoid, reduce, retain, and transfer. And I'm going to talk briefly about each one. Avoid, completely avoiding a business area of business operations or specific region or vertical that has an inherent exposure associated with that line of business, right? So if I know that my company is not equipped to deal with risks of earthquakes in California, I'm going to avoid buying or selling properties in California if I am a real estate manager. Reduce. Mitigate the risk by putting protections in place. For example, if I wanted to reduce the risk of a fire in my warehouse, I would increase my sprinkler protection. So I am reducing my risks internally. Retain. If I'm retaining a risk, I'm comfortable with the financial risk associated with an exposure. So I decide that I'm going to take all of that risk on with the consequences that come with it. In this case, you'll usually see organizations do this if they have the resources and the capital to cover costs in the case of the worst case scenario or a loss. Transfer, and this is what we're going to talk about for the majority of today's presentation. Risk transfer is what you hear is what you think of when you hear insurance or reinsurance. When you transfer risks, you approach insurance companies and say, I have X amount of exposures, and I need to put together a program that covers that exposure in the event of an earthquake, in the event that one of my workers breaks their leg on the job, so on and so forth. So I really like this graphic, and I think it sums up the property and casualty ecosystem really well. But enterprise risk transfer helps mitigate a company's financial risk in the event of physical damage to their assets. So that was one of the answers when we talked about what is risk. So that's spot on. So during Hurricane Sandy in 2012, businesses everywhere lost millions of dollars due to damage caused by wind and flooding. If they had not properly transferred that risk through this ecosystem that you see on the screen, then their physical assets would be either shut down or they would have to find a way to get capital to build them back up. So obviously risk transfer is important, and the type of risk transfer is very important as well. You might be asking yourself, what happens if I own a business, and let's say it's a small business per se, and I don't purchase insurance and transfer my risk? That's unfortunately not an option. In order to legally operate a product-based business in the US, state and federal regulators require you to purchase property insurance and liability insurance. Just like you can't drive a vehicle without auto insurance, some level of risk transfer is required to successfully operate a business. I won't go into it too much, but since I am in reinsurance, I decided to put that on this graphic as well. That is considered the back end of our ecosystem. And just like all of the companies you see today, like the large tech companies, the airlines, oil and gas companies, insurers also have to transfer the risk once they take that on. So when they take the risk from those types of companies, the tech companies, the oil and gas companies, they can also transfer it again through reinsurance. And I won't dive into it. It gets pretty complex, but for the purposes of early career professionals and students, it's good to know that reinsurance exists, but I wouldn't worry about diving too deep into it unless you want to pursue a career. If that is the case, please ask Tandeka for my contact, because I can spend 15 to 30 minutes talking about it any day. Moving on. I want to talk about risk analysis and how do we quantify risk. We're going to get into an interactive portion again. Based on how we've just talked about risk and kind of the basic concepts that I introduced to you, I want us to take a moment and think about how we quantify risk or how it's possible to quantify a risk. and then we'll go into 2 shares, and then I'll move on to tell you kind of how the process works. And while we're thinking, I'll just give you some background as well. So a premium is charged anytime you purchase insurance, so risk transfer, whatever it may be, whatever line of business. How are we thinking that the insurers are coming up with these premiums that they have to charge to our clients, the insured?
Actuary.
Good answer, Tendeco. That is part of the process. So that was a hard one. I'll move on. Doesn't seem like we have any thoughts about that, but let's talk about it briefly.
Oh, Karan's got his hand up.
Oh, Karan?
Go for it.
I'll give it a shot. I mean,
there you go.
quantifying risk. So I'm a risk management intern, so I'll give it a shot based off what I've learned. Could it be anything from like geographical location, past history of any sort of incidents that have happened at the property, or just in general past history, and then I think value as well. I'm not sure if value of the property or the asset goes into it as well.
Karan, it seems like you're learning a lot during that internship. You are spot on, my friend. So in the property world, I'm going to give you this from a property perspective. Casualty is done differently. Cyber insurance is done differently. Any line of business has their tweaks to this process. But in the property world, it is rate times value equals the premium charged. So insurers will do a complex analysis of companies' physical assets via spreadsheet like the one shown up here on the screen. Then they apply that rate based on what the market is for that type of exposure to the values that client has. And these are often massive deals that amount into millions of dollars in premium. But that's how they get the final number that they say, okay, you're getting charged this amount for your property insurance, property commercial program. So I'll get this is called a schedule of values. I'll get a schedule of values that looks like this. Often it's a lot bigger than this. And then I'll put together a full marketing effort to help go to my insurers and transfer the risk of loss. And that's captured by the spreadsheet. There's a lot that you can pull from this. So we're just going to talk a little bit about how our reinsurers take this list of the schedule of values and turn it into something tangible, which is rate. So another example of a schedule of values, a smaller schedule here. So TIV is the sum of value of all values owned or operated, and that's inclusive of business interruption and property damage. PML stands for the probable maximum loss. That means that based on the exposure and the losses that a given client has suffered in the past, I can make a pretty good guess as to what the probable ceiling would be for the losses on the account in that year. MFL, or maximum foreseeable loss, is a bit higher and would capture the PML plus any losses that would occur due to the lack of risk protection. Remember, we talked about the sprinkler system. That all goes into what that MFL would be. MPL, or cat losses, is the worst case scenario. So that's maximum possible loss. And that would be a case where your entire portfolio is destroyed. And I guarantee you no risk manager on earth wants that. So again, I'm a visual learner. So I put this together in terms of layers, and the orange layer here shows that maximum possible loss, but then you decrease based on what the possible loss is in any one event. So there are, to Tandeka's point, a team of actuaries that put together these large spreadsheets that conduct an analysis on these schedule values that I showed. So we go through this process with every client. And as you can expect, the more assets that you have, the longer that process takes to kind of get some tangible numbers around, what it is we are transferring and how it's going to react in the loss scenario.
And it was Rebecca, by the way. I can't take credit for
Ooh,
it
I'm
was
so
Rebecca
sorry,
who said actuaries.
Rebecca.
But
I'm
close
not taking any
enough.
credit from you. I apologize, but you were spot on as well. You got some great answers, and I appreciate the participation, everyone. So we're going to spend a little bit of time on this slide here because I think it does a great job of conceptualizing the way insurance is purchased on a corporate scale. Karan, I'm going to pick on you since your first answer was awesome. Do you know what this is called right here? What these charts are called?
I want to be honest, I don't know.
No problem. No problem. This is what we would call a schematic or a mud map. So when you purchase, let's take a step back. When you purchase car insurance, one insurer usually covers your complete liability and any damage to your car in the event of an accident, right? As you can imagine, if you have a large global program, purchasing property under one, transferring risk under one insurer is not always something that you can do. There's a lot of risk to take on in those large portfolios. So you have three different ways in which these programs are structured. So A1 here shows that single carrier option. That is when one single insurer takes on all of the risk of the insured, our clients is, for the purposes of this conversation. A2 is a quota share program where multiple insurers take parts of the exposure all the way up to the limits of the policy. And A3 shows what we call a shared and layered program. This is often the most complex of the three and takes anywhere from 6 to 40 plus carriers to complete the program. And when I say carriers, that's just another word for insurers. So let me stop there. Any questions? Because this document is kind of the crux of what we do in the broking world.
Has anyone else seen these mud maps before? I know Karan said he hasn't seen them, but raise your hand if you've seen this before. Okay, one person, two people. Gotcha, okay.
Awesome. So now we're going to move into insurance contracts and the components of a policy. So these are going to be the components that go into a policy. You're going to have property policy components, the policy coverage, any type of business interruption is going to be listed on that policy. And then your policy deductibles, which are very important, and any coverage restrictions that may be in place. So policy components. What's going into that deck page, that declaration page of that basically outlines what the policy is going to do and what exactly the contract is representing. So there's going to be the named insured, which is our client and any of its subsidiaries, the address of the insured, the date and time that the policy is protected, and a full description of limits and deductibles and premium amounts if the account is closed. So like all contracts, it also details exactly what is being agreed and the conditions necessary for the contract to take place. I think that's basic. We can move on from there. The exclusions are really important because it fully details what's explicitly not covered in the policy. If my property gets hit by a hurricane and wind is excluded in my policy, then I have no coverage and I'll have to deal with that loss completely by myself. So it's very important to not only look at the exclusions, but the perils that are covered under that contract of insurance. Oh, moving too fast. I'm also driving the presentation too, so business interruption, this is huge. So at the top of the hour, I mentioned property insurance. Physical damage is a huge part of property insurance. I mentioned that property risk transfers the financial risk associated with any physical damage, but how do you calculate the loss of income that would happen or be caused from a physical event? That number would be based on companies' net income, their fixed expenses, and then payroll of their workforce. We like to create these BI worksheets, and essentially that's just an opportunity for the company themselves to work with actuaries to aggregate those three components. And then they come up with this sum that they're able to have our insurers price their premium off of that BI number. We have a question, Riley.
Would you say that business continuity planning would be a part of this?
Absolutely, absolutely. It's a huge part of this. Business continuity planning actually helps our insurers get comfortable with our risks, our clients' risks, and if they do see business continuity exercises being run, then they have a better chance of decreasing their rate charged on the program.
Thank you.
Of course, great question. All right, so I've been talking for a while. Let's just stop there too. Is there any other questions around BI policy components? These maybe not the most interesting part of insurance, but it is important because at the end of the day, our clients are relying on us to deliver a product. And again, we're not selling anything tangible. We're selling our expertise in the space. So these things are very important when you get into the space and you're able to actually execute on behalf of your clients.
I have a question.
Yep.
I have always seen BI as bodily injury. So am I thinking about that wrong, or is there a
We're not. So that's a great point. And you'll hear two people with 40 years of experience in the industry describe the same thing or the same acronym in different ways. And that's because they might be in a different line of business. They might have had a different level of experience. BI in the property world is business interruption. In the casualty world, it is bodily injury. So we like to describe it out to our clients. I won't just refer to it as BI because I don't want them to get confused, because a lot of these clients, when I say clients, these risk managers at these Fortune 500 companies, they are placing both property and casualty insurance. So you want to be very clear in your delivery of them as well.
Thank you.
Great question.
And our industry loves acronyms. If you guys haven't experienced that already, we love them.
Yes, definitely. I can't tell you the amount of times I've had to just, search the pages and pages of Google to get to the insurance pages where the acronyms are described. So, all right, let's move on. Obviously, a lot of bright folks in the room with prior experience in insurance and risk management and insurance. Who can tell me what a deductible is? Should have most hands up in the room. No answer's wrong.
I can answer this one. I'll try.
Yay, go Emily.
I guess like a deductible, I think like it's just a way for the insured to retain some of that insurance risk. So if, for example, like a property, their building burns down and their deductible is like $10,000. So that's like the amount of money that they're agreeing to retain if they suffer a loss themselves, and then like the rest would be paid through insurance. But yeah.
Spot on. So a deductible is the amount that insured would have to pay before their coverage for a loss kicks in, right? And Emily described it perfectly. Go Aon Canada. But let's just talk about the different types of deductibles. And I wanted to focus on two here. The AOP deductible stands for all other perils, another acronym there, but it does stand for all other perils. That's a blanket deductible for the program. So if the super for my apartment building accidentally unscrews the wrong pipe and it ends up causing the entire basement to flood, the AOP deductible would apply to the loss. So that's much different than if a hurricane caused a flood or, there was a fire event. These are all going to be under different deductibles. So let's say that loss, the one in my apartment building, ended up being $5 million in total damages. If the AOP deductible is $1 million for that policy, then the client would be responsible for paying that first $1 million, and then their insurance would cover the rest up to the $5 million. Does that make sense to everybody? I like to give examples so it kind of, you can visualize it as well. So CAT deductibles are completely different. They apply to losses that happen due to natural catastrophes. So CAT is our acronym for natural catastrophes. And these are typically higher because they're usually involved with a more severe loss. So a CAT loss could be an earthquake. It could be a loss deriving out of a hurricane or tornado. So any kind of act of God, so to speak, would be covered under a CAT deductible. And again, those can be percentage based, but they do tend to be higher than whatever that AOP deductible is. Deductibles can also have a huge impact on pricing. So let's think about this conceptually. If the insured is retaining more risk, they're going to be paying more in losses. So if their deductible is higher, they're going to be paying more of those losses that they experience throughout a year. The price of their coverage would be lower if more of their risk profile falls under their financial responsibility, right? Because now they're paying out more, they're taking more risk. So their insurers on their program are going to be forced to adjust their pricing for their elevated retention, right? So again, if you think about, and I'm going to backtrack here. If you think about this document right here, you have, let's use A2. So for example, the deductibles are here. And I'm hovering over right here, right under D. Then if you have a deductible that's higher, and let's say it starts halfway up the program, you're going to be charged less in premium because your insurers, this entire panel here, are taking on less risk. So they have to adjust their pricing, right? It's rate times value equals premium. So they have to adjust based on that change in value that they're covering. And Tandek is going to provide the recording of this, so you can go back and kind of just sit with that. I know it's like, again, trying to think about something that's abstract. So this is what most people retain over the course of a year. So kudos to you for doing it in 40 minutes. Okay, so I include this slide because I just wanted to show how long a commercial property program can take to actually, the amount of work that goes into actually putting it together. So from the time that we engage with the client to the time that the policy incepts, it can take up to 6 months, and it usually does take 6 months. There's a lot of work that goes into each placement, and you get to work with your clients to literally put their programs together that are specific to their needs, right? So you're constantly checking in with them. You're giving them options on what might make sense because of the state of the market, what might make sense because their business change. It really is a collaborative effort, and we try to be as consultative as possible here at Aon. And a lot of our trading partners like to do that as well. So that's all I have. I want to open it up to Q&A now, and hopefully I did an okay job at explaining a very complex ecosystem. But yeah, let's open it up to questions.
Fantastic. So I'm going to give everyone just a couple more seconds here for any questions for Josh. Yep, Riley, go for it.
I was just wondering if you could talk a little bit about how your work within like this industry and your career so far has aligned with like your personal values and then your passion projects that you mentioned earlier.
Yeah, great question. I think, so I'll start out with the work itself. So I started out in commercial property, right? And every day I experience something different because insurance truly is an industry that evolves with the current events of whatever time you're in. So during COVID, I started at Aon, let's call it 6 months before the pandemic. And once the pandemic hit, I saw a completely different property market than what I did pre-pandemic. When we suffered supply chain risks as a nation, we saw our business change. We saw our clients' needs change. So I think that's what kept it interesting for me. And to this day, I still learn something new every day here at Aon. But with regards to my passion projects and kind of being able to switch those roles, I think at Aon, and especially within our early careers space, is somewhere that encourages folks to be hungry to learn. And you're able to, because we do so many different things, you're able to explore something before actually jumping into it and making the decision, okay, I want to do this full time. And I think that really does give you an opportunity to learn multiple disciplines, to learn different verticals, and learn them intimately through actually doing it, right? Being trial by fire. So I hope that answers that question. I also want to give a huge shout out to our leadership team. And Tendek has heard this before, but the executive leadership team of our region here in New York, they place diversity, equity, and inclusion at the forefront of everything we're doing. So that has allowed me to really stand up for my beliefs. And I think it's really just made us better as a region and as a firm.
Great question. Any other questions for Josh about him, his career, New York, Aon, property insurance? And if not, oh yes, go for it. Victoria, yes, please.
Hi,
And then Kennedy.
Yes, I've been holding out. I have an unfair advantage here. I teach risk management and insurance courses, so I just kind of sat back and allowed the students to ask and answer all of the questions. But Josh, thank you so much. That was a wonderful presentation, and you're absolutely correct. Reinsurance is very complex. But I do have a question. What are some of the most common challenges that you're seeing in terms of when it comes to placing reinsurance business for your clients?
Good question, and thank you. I wasn't sure how I did. It's the property space is interesting, to say the least. I would say one of the biggest challenges is navigating a hard market. I haven't seen a soft market in my career, but I hear it was so much different from what we're seeing now. Everyone is vying for market share. And as a reinsurance broker, obviously I want to take up as much as that market share as possible. But you know, there are competitors that, and when I say competitors, more competitive capacity, or capacity that's more palatable for the insured, that could go onto a program. But we like to approach it in a way where we're not just working with our commercial team, we're also working with the insurers on the back end to see that third party business as well.
Thank you.
Fantastic. Great question. Kennedy, go for it.
I think I know this guy.
Thank you so much, Josh. So you kind of answered the question. It was as if you were reading my mind. I wanted to ask, right, the hard market and the soft market, but I guess I can also put it this way. I joined during the pandemic, so I saw all of that happen, right? And how it affected our, relationship with clients or the market. So from that, the pandemic era, and now, trying to go things to go back to normal, post pandemic, what would you say, is the biggest setback you had, during that pandemic era in terms of your career and in terms of, dealing with clients? And now that is post pandemic, right? What's the difference and similarities you think you see?
Great question. So I'm going to answer that in two parts. There are differences in dealing with your client on the reinsurance side, because my client is now insurers, than dealing with it on the commercial side. I think within reinsurance, we're all experiencing this hard market together. So you don't have to explain to somebody who knows nothing about insurance why the cost of insurance is so high, especially in the property market. So you do have that feeling of kind of being in the trenches together with your clients on the reinsurance side. So I think that's something I've really enjoyed And it's allowed me to just connect with them, and it's a commonality we all have. In terms of setbacks during the pandemic, I think well, I'm not going to say I know the pandemic was challenging for just about everyone in the world. So, taking that into account, I tried to do as much as I can on the forefront of our ESG initiatives, with just making sure, we were being present in our community, and making sure we were tapped into all of the things that Aon was doing in the ESG space. I would say career-wise, the biggest difference is I was behind a screen most of the time, and I had the crutch of being able to answer at my own pace. So just coming back into an in-person environment, just being able to think quickly on my feet, and getting back into that kind of quick-firing mode where I'm able to answer clients in a split second, or answer colleagues' questions in a split second. It just takes a bit of a different level of focus. So I found that to be an adjustment, but still love doing stuff like this where I'm able to, virtually reach a group of people all around the nation. So.
Thank you.
Fantastic. Any other questions for Josh? And if not, we're going to pivot over to Emily. Yes, Amanda, go for it.
Hi, yeah, so thank you for the presentation. It was really helpful. In my internship, they talk about reinsurance a lot, but I don't really deal with it. So this gave some color to that for sure. But just in the property space with like climate change and everything, and things changing, how significant is that in I don't know, I guess the need for insurance, or is that starting to play a role yet, or is it kind of just still in the future?
Yeah. So I spoke about cat losses for a good portion of this presentation. Cat losses are a direct effect of climate change. Just the other day, a tornado hit Charlotte, North Carolina. We have not seen that in the past 20 plus years. So climate change is real, and it's affecting the way we do business. It's affecting our clients in a huge way. So it's really one of the things that are driving our space. Kennedy talked about a hard market. We are in the heart of wind season right now, where a lot of the cat losses do happen. So, we're going to be heavily affected by this wind season, and even losses like the tornado in Charlotte. So it is a big part of what we do. I'm going to give Emily her time to speak as well. So I'm going to go on mute here.
Okay, awesome. So we are going to pivot over to Emily Jung, who is a Spencer Scholar, which means she received a scholarship from us from Spencer Educational Foundation. She is based in Canada. She goes to the University of Calgary, and is interested in this industry, right? Careers within risk management and insurance. So she just completed an internship at Aon. So tell us a little bit about that, Emily. Tell us a little bit about your experience with Aon and what the internship was like. And the floor is open as well to questions. If you guys have any questions for Emily, feel free to ask.
Yeah, thanks. Great presentation, Josh. Really enjoyed it. Yeah, my experience at Aon. So I started in September 2022, and then I had a 10-month co-op / internship till July 2023. So just ended this summer. And as much as 10 months is a lot in the grand scheme of internships, it's nothing in terms of actually career work. So, but I was glad that I was able to have a little bit of a longer amount of time than 4 months, because I got to see the ebbs and flows of business. I think when you just see it in summer, there's definitely different influx of kind of what the clients are expecting from their account executives, and kind of what kind of demands are happening there. So I got to see that throughout the year, which was extremely valuable. And I don't know if I mentioned this, but I worked under the account executive client facing side of Aon, in the energy department out of Calgary. So that's kind of the main focus of the work that I got to see. But aside from the technical aspects, I think the most valuable stuff was the networking piece. And our office And I think Aon as a whole really prides itself on getting their workers and colleagues involved and putting them out there, and especially from the client side, making sure that they get exposed to the industry and making those connections. I think that was the biggest thing for me. I was like, wow, like I'm just an intern. Why would you want me here? But it was great to see that my manager just like genuinely cared for all of us. And I think that really grew my confidence, my knowledge, just talking to different types of people and kind of seeing their perspective on the industry and what they do from different companies. I learned so much from that. And yeah, it just was great. I think technically as well, getting to work on insurance policy renewals and seeing like the small little details that you don't really get to learn in class is definitely invaluable. So that was a great experience for me.
Fantastic. So another question for you, understanding that our audience here today, is primarily college students, right? How did you actually get the job? So, did you like click on a link somewhere and apply? And what was the interview process like with Aon?
Yeah, so I would say it was kind of like not like informal, but it was definitely not like the most standard way. I have a club on campus. It's like a risk management club. So through that, we've had a few events of networking. And so we bring in professionals from different companies. And that's how I met my, past, but at the time, future manager. And we just got chatting and had like a really good relationship over the past 2 years. Occasionally I would just reach out to her and just go for coffee with her. And when my internship at Chubb Insurance finished, I was like, maybe it'll be time to kind of look into something else for my next 10 months. So I reached out to her and was like, hey, is Aon having any opportunities that I could like apply to? Would love to work for you or the company. And at the time, something had just opened for like an energy position for a student. So we got talking and kind of had like an interview process through that. So definitely not like the most standard applying online, send your resume in, easy. It was kind of more through like that networking piece. But I would say as well, even if you are applying online and just standard putting that cover letter, definitely make sure to like, if you do have people from that company that you know, or maybe your friend knows, definitely reach out to them on LinkedIn and kind of see like, hey, like, I'd love to chat. I applied for this job, or I'm thinking of applying for this job. Could you give me some insights on like your life and your experience there? And just like maintaining that relationship, because if you can bring yourself to the table first and they're seeing your name, they have no idea who you are. It's a lot harder to put trust in that when they have a face to the name and they know this person and they're able to see that the student's really like putting themselves out there and making that effort to get to know you. I think that goes a lot further than what's on your resume ultimately. So that's like the biggest tip, I guess.
Absolutely. And that's fantastic advice. I love that you said, like obviously it's good to apply, right? Go through the process, clicking on the links, apply for the jobs online. But if you're able to network, especially with the hiring manager, that just adds on that extra layer, right, on top. And literally brings your resume from the bottom of the pile to the top of the pile, right? If you're able to go that extra mile. Any questions for Emily while we have her? Any questions about the job or about Canada in general? And if not, I do have some questions. So did you know anything about energy or like energy insurance prior to starting this job? And what was that like for you?
I think, I don't know if anyone's familiar with this, but Alberta, so that's where I'm like, that's a province that I'm living in, and Alberta has like their main industry is like energy. So definitely I had like an idea just because like lots of people's parents are employed in that industry. And also I think like at the talks of climate change and stuff like that, I think there's a lot of like different, how do I say this, talks about, and opinions about it. So I think from that end, I didn't really know, but I could hear about it. And so going into it, I didn't really know what to expect, but I think from like a risk management and insurance lens, it was like probably one of the most valuable ways to go about it, because I think I got to see the technical side. So I got to learn how, energy is produced and how we distribute it to consumers, and kind of like what the risks are as well from that perspective. As we're helping our clients trying to find insurance, it's a struggle. Like already there's a hard market, and then on top of the fact that there's an additional hard market and premium for oil and gas companies, because there's that expectation that they need to be acting in a responsible and sustainable way. So I think I got to see how we as consultants are ultimately trying to help our clients and be like, hey, this is one way that you can look better to insurance companies who are more hesitant to insuring you, is maybe you need to start reporting your ESG, kind of being more transparent about what your goals are in the future for achieving net zero, or those kinds of things were like a really good way to think about it. And also we got to see kind of like, obviously there's no ESG like perfect metric that every company is able to measure and rate themselves against. So that was a challenge that as like a consultant, we were like, how can we best advise these companies? So I got to sit in some meetings, hear a little bit about what they had to say about that. And I think that was really valuable, because you also get to see the side of like the struggles that those companies are also going through, and they have that infrastructure to transition, but it's a weird period, and how like Aon is trying to help them as well. But also we need business as well. So it's a tough time.
Right. Fantastic. Thank you for sharing that. So
Yeah.
we have just a couple minutes left. Any questions for Emily while we have her, or Josh? And Jasmine, I know we said we would circle back to you. Is your audio working? Because I definitely want to answer your question if it is. No, it's still not working. Oh, well, no worries. Feel free to, you could always type your question if that's easier for you, and we can address it, or connect through LinkedIn. So I did pop a couple links on there. Oh, fantastic. So she was like, I just saw in the chat, I was actually going to answer a question. Oh, well, no worries. We have a couple minutes if you want to type it out in the chat box. I did pop a lot of links within the chat. So I know Emily mentioned ESG. We had a session earlier this year about ESG and what that is. So if you missed it, definitely check out our website, click on the resources tab, go to webinar series, and you can learn all about ESG and some of the other topics that we covered earlier this year. So I guess final question for you, Emily, since you are at the University of Calgary and you're taking some risk management and insurance courses there, what is that experience like? And especially for those of us in the audience that have not taken RMI classes or go to a school where that's not an option, what has your experience been like?
Yeah, so I take business. So most of my courses are business oriented, but I kind of wanted more of a specialization in that risk management field. So that's why I decided to do a concentration in that. And as some of my fellow risk management students know, it's a really good way to just kind of like talk about recent issues that are happening in day to day. So I think it's a really good opportunity for students to stay in the know, and challenge themselves. And a lot of our projects are centered around like, XYZ company is facing this kind of stuff. Can you prepare like a risk analysis and then advise them on how to maybe they should transfer the risk, whether it be through insurance, or maybe should they retain some of the risk? That kind of just critical thinking, I think, is a really good way to understand businesses from different types of perspectives, things that you haven't ever thought were a risk before. I think it's also really beneficial too. Individually, I took a wealth management course, and that kind of taught me a lot about my own personal finances and how to protect my risks as an individual. So I think it's just extremely valuable to students that don't exactly know what they want to do in business particularly and want a more specialized field. I would totally recommend going into it.
Fantastic. Well, thank you guys so much for being here today. Josh, Emily, thank you for hanging out with us. for an hour and sharing your knowledge. So hopefully you'll get a lot of LinkedIn requests by the end of this session, but we truly appreciate your time. For the students that are here with us today, as you know, we host these sessions on a weekly basis throughout the summer. So our next session is going to be next week, Thursday, August 10th. Our presenting company is going to be Liberty Mutual Insurance, and we are going to learn all about predicting the future in terms of data science and how it relates to the insurance industry. So thank you all again, and we will catch you next week. Have a great afternoon.
Thank you, everyone.
Thanks.
Bye.